Hey guys, it's your boy Ricky Analog here, ready for another episode of How to Dig. Let's get into it, guys. As always, this is for educational and informational purposes only. It's not a solicitation to trade. You need to recognize, guys, trading's risky business. Alright, let's hop into it. Look at that chart. Anybody know what that is? Yep, that's MBOT. That is from yesterday, the 14th. Today is the 15th. And so it's already played out, but I do want to show you guys what happened and how y'all got birdboxed. Not once, but twice. Yep, they did you guys dirty. And I'm going to show you guys how you can use the filings to, on a day like yesterday, at the very least, realize that it's not a short. And at the most, possibly even be able to use this as information that helps you take a long on this and know that it's relatively safe and there's a good reason for it to close as strong as possible. So let's get into the filings, guys. We see it gapping up, from I think 225 the previous day, and it's gapping to 4, so it's definitely on everyone's high alert list for a short. And a lot of people were pointing out, they have an S1, and a lot of people on Twitter were quick to point out there's no effect on it. So this notice of effectiveness is not for this S1. And if you're ever in doubt, you guys can click here, click SEC Edgar, and you can click the file number, and you'll go see if there's an effect. It'll say it here. This will be everything has to do with this S1. And it's nothing, right? So keep that in mind. There's no effect. And I want to point out that it wasn't that long ago that TENX and TNXP both did midday offerings without effects that were filed. Now, that's because you don't have to file the effect the same minute you get it. You guys, a lot of times these companies will get the notice of effectiveness from the SEC and they'll hold it in their pocket for a day. They'll drop that fluff PR and then they'll ambush you guys with the offering because you'll think there's no effect. So my first initial thought was this is not a short because they may have that effect. And then someone pointed out to me, Ricky, they ain't got the effect because the government shut down. And I said, holy crap, you're right. They have not been issuing notices of effectiveness since the shutdown. Now, that doesn't mean you can't do an offering. If you have a shelf with an effect, you can use it. You can do your offerings, you can file your 424s, but if you don't have an effect, that shelf is dead in the water till the government reopens. Once I realized that, everything became very clear. It was, oh my God, I can't believe what I was saying is a complete avoid on the short is now an almost not an avoid on the short. What I was saying was a complete avoid on the long side is now almost a guaranteed long. And I'll show you why. One, let's just break it down technically, guys. This chart was just perfect. The dip and then the break over that 455 level, you would have never went red on that trade. It just went. Once you were in, if you guys understand what is actually happening here and why this price has a very good reason of closing strong, you have to know the filings. So let's go back to the filings and let's look into some things. So they can't use the S1. How are they going to raise money? Well, do they have another shelf? The S3. Now, does this shelf have an effect? First of all, let's see what it's for. $75 million. Ooh, it's a lot of money. Does it have an effect? Yes, it has. It's an effect. Has it been used? Yes, it has. How much did they use? $10 million. So there's $65 million left on this shelf, guys. And let's also note when they used it was 6/6/2017, so it's more than 12 months old. So that $10 million does not count towards how much money they've raised in the last 12 months because it's old. So now all of a sudden we realize they do have a way to raise, but what's their limitation? Can they use the whole $65 million? Nope. Why not? Well, because they're MVPHS. So the float on MBOT is 2.5 million shares. And the highest closing price, let's go pull the chart up so we can see visually. Go to the daily chart. Here's a 3-month chart. You use the highest closing price in the last 60 days. So from about here forward, I think the highest closing price is going to be probably this day here, which was 470. So let's say 0.5 million shares times 4.7. That gives them an MVPHS, which is market value of publicly held shares, meaning the dollar value of the float, guys. It's $11.75 million. Now, you can only raise every 12 months, you can only raise a third of that amount. So you divide it by 3. So they can raise $3.9 million off of that $65 million remaining on that S3. Now, is 3.9 a lot of money? Not really. So typically when these guys want to do a raise, they're going to be looking to raise more than that. And you can tell how much they're trying to raise because you can go look at the S1 that they're waiting for the effect, and you can see the amount of money that they're trying to get from that. So, here the numbers here are showing that they're going to make a lot more money from this S1 than $3.9 million, right? But again, they can't use the S1, so their hands are tied. So if all they have is the S3, how are they going to get it to where they can use more of it? Well, the answer is simple. They need to get their MVPHS higher. And the formula for MVPHS is float times highest closing price in the last 60 days. So the only way to make that number bigger is to either increase the float or to increase the highest closing price. Do you get where I'm going with this, guys? They can't increase the float, so the only piece of that formula they can manipulate is the closing price. Knowing that they want to increase their MVPHS as high as possible is what gives you the golden key to know that this thing is not a short. At the very least, it tells you don't short this, because any dip is most likely just sucking in more shorts because they're going to use you guys to trap and rip it higher for that high close. And if you are savvy enough and know that you have full confidence in your ability to read the filings and know what is happening behind the scenes, you can take this as a long and know that you can probably hold it till the close. And sure enough, this thing closed strong as can be. I think it had a 970 close, guys. So let's go back to the filings and do some math. So let's do 970 times 2.5 million shares. Now they have an MVPHS of 24.25 million. And let's go. You can see that you guys obviously know they filed the 424 this morning, and this one was for a very small amount, guys. And this is where they Birdboxed you again. So they announced they're raising 330,000 shares at 650. And if you know how to read filings, you know that there's something fishy about that. So with their new and improved MVPHS, they are able to raise a little shy of 9 million. Actually, it shows it right here. 8.9 million is basically what they can raise off of that shelf. And what they went and did was they only raised 3 million at 650. And my opinion is they did this because when people see that, they go, man, that's actually not a large offering. Maybe this is a long. And like if you go back to the chart, look what happened pre-market. You see the shorts jump in shorts jump in and the longs bail because the offering hit. But then I think people started to notice, like, look, that wasn't a very large offering, and there's a lot of shorts trapped. So what do? It pushes back up, and then you get this big monster rip, and they get it up to $19.40, and I think it was right around here, so forgive my West Coast time zone, guys, but it says 10:45 on my chart, so that would put us at 1:45 in the afternoon on the East Coast. I believe that was when they announced that no, they're actually raising more than just the 3 million, which they could have raised 3 million without getting a better closing price the previous day. So for you to think that 3 million was all they're going to raise is, without questioning that, you really should be questioning that. You should be saying, why in the world would they have that strong closing price for them to only raise 3 million when they could have done that anyway? So obviously what they did was they midday what was it, 590,000 shares at $10. So another 5.9 million added to the 3 million they raised gives you the 8.9 million that they are able to raise. And it's cut and dry, black and white, exactly how the filings laid it out, exactly how the price action was telling us what they were doing. I just realized that this is not fully visible for you guys. There you go. Anyway, but yeah, that was the game plan, guys. Close that price as high as they could on the 14th so that their MVPHS was high enough to actually do an offering using the S3 since they're handcuffed on the S1. And all they're doing, guys, is they kick the can down the road. They raised, $9 million, but as soon as the government shutdown's over and they get that effect, you can believe that they'll probably be hitting that S1 too. I guarantee you, though, the price is not going to be up here where it is now. Actually, I shouldn't say I guarantee. Nothing is a guarantee in trading. People are crazy. I mean, this thing got bought up to $20 today, guys, so anything can happen. But this is how you use the filings to, one, protect yourself from taking shorts on something where they have a motive to close it high, and two, possibly use it to create a long thesis. I hope this helps you guys prevent yourselves from getting bird boxed anymore. Word to your mother. Peace.